time to take stock of where we are on the Wi-Fi Interactive, and I'm going to pull up a year-to-date chart of the S&P 500. 24 hours ago, I was saying that we were opening up by the previous day's settlement, which was Friday, and we are entering an area that would be ideal for shorts to kind of re-enter some of their positions or reload. So still kind of at these levels here, not doing much so far in the major indices, but I will note some positive developments here. First, the VIX, the fear index, continues its march downward. You can see 1, 2, 3, 4, 5 bars there in a row. Also checking out the 5-year T-note yield. This is a little bit more concerning because we saw a huge day yesterday. I think it was up something like 20 basis points. One of the biggest moves I've seen in over a decade, and that is potentially helping out the value trade and also putting the growth trade in the back seat. But at the same time, it could also cause problems for the overall market. So let's take a quick look at the sector action for today. As you said, Julie, financials in the lead, as we would kind of expect. Consumer discretionary also popping here, up 1%. And then tech and communication services. So actually a nice mix to start the day, despite those elevated bond yields, guys.
And Jared, something we don't talk about very often is fertilizer. But we've been talking about grains certainly quite a bit lately. We saw wheat. Was it yesterday that it was limit up? So we've seen some wild moves there. What's going on with the fertilizer business?
Yes, and there's also a link to Russia and the Ukraine with this, because Russia is one of the leading producers of fertilizer. So I want to direct everybody's attention to the Wi-Fi Interactive. This is a post about fertilizer programs, fertilizer prices, and saying that this is one of the scariest charts out there. This goes all the way back to 2003. Now, the last major run-up in commodities that we saw really began in 2005, 2006. For the most part, peaked in about 2008, not for everything, not for gold, not for some other things, but for the most price. You can see the green line here is fertilizer prices. They tend to lead the actual food prices. So what's happening recently? Well, up and away. We came back, had a little bit of a dip. We know that commodities have been volatile, but they're on the march up. And so when you take a look at what's been going on in the wheat market, in the various grain markets, I think it was only yesterday that soybeans closed at decade highs. Let's take a look at what's going on in the wheat market here. And we're going to put on a max chart, and we can see it's been up and away. Actually took out these 2008 highs, and no reason to think that anything is going to abate. Up another 1.9% today, so not moving the limit up, but still seeing that fuel in the gas tank there. And they're just also thinking about what popped up on my radar yesterday was actually cotton, and we'll see if I can find the CT equals F. There we go. I'm going to pull up a max chart of cotton. I said most of the commodities peaked in 2008 or so. Not true with cotton. That peaked in 2011, well after the effects of QE1 were underway, and that's affecting apparel prices. So if you think inflation is just hitting only the food and energy prices, guess what? It's hitting everything that we put, including the clothes on our backs.
Jared, thanks for bringing up bad memories for me of helping my dad put fertilizer on my lawn when I was 7. It was just an absolute dreadful experience, but might explain a lot about me today. Jared Blikre, thanks so much.